Well, good day, all. Ira Epstein of Linn & Associates with your metals market update for this Thursday, the 14th of March, almost said 13th, the 14th of March, 2019, just getting after 3:40 p.m. Central Standard Time. So a correction day finally hit into the metal markets. You know, we've had a nice rally going in these as the dollar was breaking. This bit of a return back up in the dollar, and I'm not saying it's trending, it's a return back up, put the market on pause. It didn't help in the copper that we're still no closer to a Chinese deal than we've been. President saying, you know, the deal's basically not ready. He wants a deal, and Gary Cohn was out saying he wants a deal. However, the deal's got to be the right deal, and the wording has to be worked through. Bloomberg carried a story, as I told you before, that they think that it'll be April. March is off the table for anything to happen. I don't know. Today's the 14th. Who knows? As you look at the weekly chart of closes, you can see how gold has given back a bit of a chunk here. Not a lot on a closing basis, $30 an ounce. The support in the market's closer to the 1278 level should it want to break down there. As we go to the daily charts, from your high to your low, you had about a 1/3 retracement. I think I said that yesterday, and you're falling back a little bit in the market. You haven't broken the uptrend. And the reason is you still have a pattern of higher lows, higher highs. Now, if you were to take out 1290.60, that would break this particular pattern. The market is having a problem because even with the swing line up, which is higher highs, higher lows, which is friendly, the filter on that is where is the market in relation to the 18-day average of closes. It is under it. Therefore, the bias is down, while the trend is up, if you can understand that. And what the market did is it rallied up again to what we call, at least I term, that line in the sand, and that's where the battle's being fought. Now, should the market not take out 1290.60 and take out 1311.60, I think the bulls would be applauding. You'd probably hear it on the street. Without that, you're sort of in the limbo. The market, if you look at the Bollinger Bands, the market has gotten under them 3 days, gave a big rally back. And that's why I say so often, you know, that first challenge of a Bollinger Band is so important because I realize you're trying to catch the last penny in the move. Okay, I wish you the best. I think that zones are as important as an exact number. Now that you're up here, we're waiting to see what the market will do. And the momentum of the market, if you look at it, still oversold. You got a 27 reading. Any number under 30 in a slow stochastic, if they're both not going sideways under 20, is oversold. So I have an oversold market that's running into resistance at the 18-day average. It's had a contra trend rally, if you think about that. And the question is, can it get its legs under it? Excuse me. In GLD, it's the same thing. You rallied up, got up to this 18-day average yesterday, and you fell miserably back from that. So not doing much there. You didn't get under 121.92. If you do, you end the swing line trend. And again, this market not oversold. You got both numbers over 30. GDX unable to make it all the way up to the top. And you know, we had our webinar today, and people were asking properly, Ira, you know, why doesn't GDX necessarily go with GLD or with the futures? And the reason is miners are not the same as the gold. They can lag, they can be ahead because it's a mining operation. Understand that. Yes, the underneath of it, there's gold is what they're mining, but that doesn't mean they go the same direction. These two charts, GLD and the futures, typically track each other. This market is in more of an uptrend. It's correcting. We'll see if support at the 18-day average holds. Momentum is up and bias is up. Bulls still have control of that. In the gold-silver ratio, and remember, we moved over to June gold versus May silver. Well, as long as you're up in this area, that's a high number area. And high number areas like that normally, that's all I can say is, they're not the thing bull markets in silver, gold, and all are made out of. You want to see that number slipping back. And each time it's come down here, it's come back, and if you watch it, the metals have failed on that. In the silver, you got up yesterday, not today, challenging the 18-day average right back down. And this is when you lost the embedded reading. You know, my rule, there's nobody else's I know of, is that when that occurs, price and the 18-day average make a run at each other. And I I'll stand behind that. That's what it did. But now the market stepped out of any attempt at a trend. You have a lower low, a higher high. That line in the sand is the resistance. The market has fallen back into fully oversold territory, trying to grab, if you would, the 100-day average and seeing if that will support it. If it doesn't, do we get a washout to the lower Bollinger Band? In the copper market, how many days are we hitting this 18-day average of closes? And I've been trying to point that out. This is a market that we've been pointing out for days. Saw this happening. You see that band up there and the black bands? Those are your Bollinger bands, top and bottom. As the market's going sideways, it's losing volatility. And it's losing that volatility, these bands are coming in on the algorithm. So now you've got your support very close, you've got your resistance fairly close. The momentum is down, as measured by slow stochastics. The market settlement price looks like it's going to be under the 18-day average. The bias is down, but there's no trend. You got a higher high and a lower low. Difficult market. Platinum reasserted itself to the downtrend today by having now lower highs, and it's had the lower low. You're in the first support, however. You're back to the first zone, which is the 100-day moving average of closes. The resistance is back at 839.20. Momentum is down, and bias is down. The strongest of the metals remains the one that is still up. Look at it, the Palladium, and I know I'm a broken record saying that, but it too is having its own share of problems. It's not able to get through right here. It's having a problem there, having a problem in the sense that the upper Bollinger Band is there and it's overbought. I would not, I haven't seen anything here that represents this neat ride that the market had before, and I know I've told you that. Seems to have lost some upside momentum. Then we come to the dollar, and battlegrounds become the 18-day average of closes. Today in the webinar, I was showing people this 97.66.5, and I go back on the chart and showing you all the resistance. We're in a big resistance zone there. Is this going to be where the dollar finally peaks out? Don't know. That's what we're all looking for. And the reason people are looking for it, they're waiting to see, does the Bank of Japan do anything in stimulus? The European Central Bank. Those economies that do keep the Fed, if you will, on hold, and maybe they can spur things on to hurt the dollar. But right now, the dollar's not in a trend. It had this dramatic run-up from the end of February, and it just petered out almost as fast as that vertical rise took place. I don't see a trend in that market at this point in time. You know, one of the things we like to do, and I'm sure you watch this because you like to talk technicals. Remember, we have our guide to technical indicators, volumes 1 and 2, put together by our old friends at Futures Magazine, who time took them down. They're just not in business anymore, which they would be. I love the articles. But I resurrected, with their permission, these brochures, brought them back, and I still think, I don't think anybody reads as much on the markets as I do. I read like mad. And I'm always reading somebody's new thing. I think these are the best little primers around. I just can't get away. They're easy to understand and they get you going. We put them together in PDF format. You can print them out. They're full color, or you can just read them that way. Just give us a call. You can go to our website, sign up for our free offers, or click right up here. I'll take you there. I'm Ira Epstein. You have a good day.